My message is to understand how Bitcoin is different. If you don't understand that, keep reading, keep doing your research on it to understand how it is different from all the other cryptocurrencies and why it is a true store of value. Um, really quickly, the way I see it is that Bitcoin, and you've heard me say this before, and I think Michael Saylor says something very similar, but it's backed by 175 terawatt hours of energy, which is the equivalent of 20 full-scale nuclear reactors running 24/7 around the clock. And why that's important is that's what backs this protocol. So it's literally nation state resistant, and that's how safe it is. And so
James Lavish begins by presenting the harsh reality of today's financial markets. The system is set up to safeguard the institutions rather than the typical investor. He describes how the majority of people are unaware that they are playing a losing game in which traditional investing models no longer provide adequate protection and fiat currencies are continuously depreciating. Lavish believes that comprehending the workings of inflation, debt, and Bitcoin is the only path out. Nowadays, maintaining money is more important than simply increasing it before laws permanently change it. Please remember to like this video, subscribe to the channel, and enable post notifications before we delve further. Thank you and enjoy the video.
Everybody thought a Bitcoin strategic reserve was kind of laughable just, last year. And now it's already signed into law. I mean, it's an executive order. So, things can happen quickly in this world, especially if you get some strong proponents. And Bitcoin jumps back over $100,000, you're going to have a lot of people, who are actually suddenly in favor of it. So it's absolutely an interesting journey that we're going to be on here. And these are the massive tailwinds that people are just ignoring right now. They are not priced into this stock into this asset. They're just not priced into it. And so for those people who have been kind of frustrated and bewildered and surprised by this latest move, well, Bitcoin always has drawdowns and consolidates before it has another, leg up. There's uncertainty in the markets. Markets hate uncertainty.
How is that, investor appetite different this time around?
Yeah, well, it's just that classic emotional response to the market movement. You have that FOMO and you have the fear, right? You have just the pure fear and the fear of missing out. Well, as Bitcoin ripped up over $100,000, everybody was asking me, hey, what's going on with Bitcoin? Should I be buying it now? And I'm like, I've been telling you to buy it since it was at 17,000. So, I mean, sure, you just always buy a little bit, but why didn't you talk to me when I was raising my fund back 2 years ago when I told you that here's at 19,000, But look, reality is that's just human nature. If you have Black Friday here, Luke, which is that day after Thanksgiving where everybody has the day off and they go to the stores here and they get all the big sales, or Cyber Monday, the next Monday, they're literally crawling all over each other to get a TV that's been marked down by a few percent. But it's crazy because you have a sale in the stock market and they get scared and like, oh, I don't want to buy it now. You have a big sale on Bitcoin, it's down 30% from its high. And they're like, oh, I don't know, maybe I should wait. It sounds like it's going to go to 30 again. So, it's just one of those things. It's a natural response. And that's why as investors, it's hard. It's not easy to look at these charts and to think, wow, this really could come back to the $50,000, $60,000 level. If we have a steep drawdown in the overall market, there's always that possibility. And then you stop. And as an investor, you have to stomach this. This is where it's that famous quote from Rothschild, where there's blood in the streets. You should be buying even if it's your own. And so you should be buying even when there's blood if there's blood in the streets, even if it's your own. And that's kind of how you have to stomach it as an investor. But on the flip side of it, it gives you great opportunity to adjust to higher beta positions because meaning stocks and investments that are more sensitive to the Bitcoin price moves, because you've had that large drawdown, and so now you get the advantage where you can reallocate to some higher beta opportunities. And so that's what you do. You just try to find those spots. It does worry me for some of these smaller companies that are super young and super new and are not revenue generating. The more, real early VC type stuff, that it's harder to gather assets and to get investments in these periods. But that's the nature of that game.
According to James Lavish, they are opening a second fund because of the high demand for their first one, which is now closed. This new fund will remain accessible to new investors over time because it will be evergreen. The hitch is that those chances will only be available to investors who sign up before any private deals are made. That's because they have to abide by structural and regulatory regulations. According to Lavish, this arrangement allows the fund greater flexibility and makes it a better choice for long-term investors who wish to gain exposure to the Bitcoin market by investing in the ecosystem surrounding the asset as well as holding the asset itself. Now, let's dive back and hear what he has to say.
Yeah, so what was signed into executive order was a strategic reserve for Bitcoin that basically said that the U.S. is going to hold the Bitcoin that they already have and that they've acquired through seizures and from fraud and illicit activities, illicit and illegal activities. So, which is about 200,000 Bitcoin. They sold about 200,000 over the last 10 years. Mind-numbing that they did that, but they basically this executive order that Trump just signed a couple weeks ago said that they won't sell anymore. That's great, but they also don't have a function to buy it they don't have a function to buy it outright and using government funds to do that. So it has to stay budget neutral. And that's basically what it said. If they can only acquire if it's budget neutral. Well, how could it be budget neutral? Well, there's a lot of different ways you can do that, but one of the obvious ways is that at the same time that they created the strategic reserve, they also created what's called a digital asset stockpile. And that digital asset stockpile is all the other things. People that are in our space like to call shit coins, but the reality is some of those things do have some function. It's indisputable that things like Solana have some sort of function. I don't know what the function is for XRP, but but you've got other things in there, ETH and Solana, XRP, and maybe some Cardano, whatever it is that they've seized. That's kind of a rounding error compared to the Bitcoin seizures. So they've got those, but they don't have any function to add to those except for through seizures. And so because of that, that they're not going to be adding to those stockpiles. They'll probably be looking to unload them, and that would be an easy way to just sell those and buy Bitcoin at some point. My message is to understand how Bitcoin is different. If you don't understand that, keep reading, keep doing your research on it to understand how it is different from all the other cryptocurrencies and why it is a true store of value. Really quickly. The way I see it is that Bitcoin, and you've heard me say this before, I think Michael Saylor says something very similar, but it's backed by 175 terawatt hours of energy, which is the equivalent 20 full-scale nuclear reactors running 24/7 around the clock. And why that's important is that's what backs this protocol. So it's literally nation state resistant. And that's how safe it is. And so that's why it's a strong store of value. There will never be any more created than 21 million. And it is an extraordinarily secure network that's completely distributed. It's totally, distributed. So it's decentralized. Don't be, just try not to be scared of the volatility. Embrace it. Embrace the volatility because you can take advantage of it. And have a long-term view on it. And that's how we look at it in our fund. We look at these things that we buy as long-term investments. One of the differences of how we invest versus the typical VCs is that Luke, we're looking for real companies with real revenues and real profits. That's our meat of what we're investing in. So it's like we're looking for 3 to 5 year maturity in these plays, typically maybe 2 to 3 years in some of them. The VCs are looking for a 12 to 15 year payout, really. I know they're 10-year funds, but these companies, they take a long time to mature, especially when you have interim markets like this, and it's difficult for those companies to grow. But that's why we're so excited, is we see these periods of volatility and then downswing and upswing, and we're super excited about that. And that's exactly why we're launching Fund 2. We were actually approached, Luke, by a couple of family offices who wanted to be in Fund 1, but it was closed. So this second fund is open. It's going to remain open. We're gonna accept investors every single month now. And the only difference between this and this fund, Fund 2 and Fund 1, is that you have to be an investor in this fund before we make the private investments to get allocations to it, because they have to be side pocketed. That's the only way you can do an evergreen fund that's fair for everybody. So, but that's why we remain super excited, and we're optimistic about it.
James Lavish gives us a valuable lesson on how to approach the cryptocurrency and investment world, particularly in these uncertain times. Instead of being afraid of volatility, he urges investors to welcome it. According to him, opportunities arise from turbulence. The secret is to remain focused, act strategically, and think long-term. He and his team invest in legitimate businesses that make actual money, and that is precisely how they operate their fund, with a long-term perspective. Lavish concentrates on companies that may fully develop in 2 to 5 years, as contrast to standard venture capital organizations that frequently wait 10 to 15 years for rewards. Though it is based on patience and sound principles, that is a far shorter time horizon. He also discusses the rationale behind the creation of a second fund. Due to tremendous demand, the original one has already closed, but the second one is intended to be evergreen and accessible to new investors each month. One crucial rule, though, is that you must be invested before the fund makes private investment deals in order to be eligible for them. This structure, which is necessary for compliance and fairness, guarantees that early participants aren't diluted and that everyone follows the same rules. Lavish also discusses an intriguing shift in American strategy. Instead of selling off the roughly 200,000 Bitcoin that the government has confiscated over the years, as it has done in the past, a recent presidential order has instructed it to hold on to the cryptocurrency. Don't forget to like, subscribe, and enable notifications for more valuable content, and as always, happy investing.